Hello Wolfpack, some preliminary bullish news coming out about the Bitcoin rally right now, about the Bitcoin push up, but also a bit of reassuring and a bit of instilling the same message, right? Because yeah, we've had a bullish break here to a certain extent, broken above the ascending triangle. The only thing is we don't know if it's an ascending triangle, right? We've spoken about this a few times in the previous videos. We have a dashed line here saying it's an ascending wedge. We could also draw it as an ascending channel if we really wanted to, and we could do something like that. And so there's three possible kind of possibilities as to what this was. There was also the possibility that this was a symmetrical triangle, and in that case, it would still not be broken either. And so, you know, we've got a ascending channel, ascending wedge, ascending triangle, symmetrical triangle. The ascending triangle is broken. The other three possibilities haven't broken yet. I wouldn't consider this a breakout just because we don't actually know what the structure is, for sure. And so, but like, let's just leave it at that. Let's just give it the benefit of the doubt and say it was a breakout of the preliminary structure. Now, even if that's happened, you know, our initial kind of assertions still remain, and those assertions are that, well, we shouldn't really be buying unless we flip 46k. Why is that? Well, because 46k is the entire downwards trend's resistance zone. If we flip 46k the top of this red rectangle here, we're flipping this entire structure here, and we're creating a new kind of bullish macro structure. We create a bullish macro higher high, and then we can start flipping support and heading upwards. So if we zoom into something like the 4-hourly chart, we can see we are very much still in a resistance box here. And just because we've closed a daily candle slightly above the supposed ascending wedge structure, it doesn't really mean we've seen a breakout at all. Why is that? Well, because we've done it before. I mean, we did it here on February 16th. We closed just above here at around 44.5k, and we've closed here at around 44.6k, right? So we're literally like 10 USD above what we were on the 15th of April, the 15th of February, the day before rejection. This is not a breakout by any means. And if we're looking at something like the 4-hourly chart, we can really see that come to life. We can see this thick yellow line here followed by a red box, and we've come above this box on multiple occasions. This is not the first time. I mean, throughout the entirety of this like early February period, we closed multiple 4-hourly candles above the box, and then essentially just drop right back down. And we're doing the same thing right now. So I would say this doesn't constitute any sort of breakout on Bitcoin right now. But if we're speaking about something like the total cryptocurrency market cap, this is where it starts to get interesting. This is where we start to see those bullish signs really start to break through. We start to see a break above symmetrical triangle formation here for the total cryptocurrency market cap. However, even though we've had this breakout, I would still argue that we were within resistance, because this red box, this pre-existing red box that I've drawn here, is very much still within resistance at 2 trillion USD, which is basically a psychological resistance zone and a long-term resistance zone for the total cryptocurrency market cap. We're just below that right now. I'd say closing above 2 million USD would be 2 trillion USD, sorry, would be a constitution of a breakout. Now, at this point, I would say this is too preliminary to kind of discuss anything like this. And, you know, breakout in the sense that we're only 0.3% above that resistance zone. So I wouldn't say it's necessarily a breakout at this point. However, there's no denying that we're seeing some bullish signs here. And, you know, even though I say that, you know, we had the same thing happening in mid-February, we didn't see that in mid-February, right? We saw a wick to the top. We didn't see a breakout with a daily candle close above. So, you know, it's undeniably a bullish sign there. But I suppose the premise of this video is just to say that, well, you know, although there are bullish signs coming through, and I mean, this entire move has been a bullish sign, we're still below resistance. And, you know, I suppose when it comes to trading, you know, say you're an absolutely terrible trader, every single trade you're getting goes wrong. You know, the number one thing you should be doing is not buying at resistance and buying at support. We're at resistance right now. We're in a resistance zone. 46k is the biggest resistance zone in the immediate future for Bitcoin. Okay, and we're in that right now. We're fighting it. And so why would you buy right now? Just wait. Just wait for confirmation above. At no point in this whole channel have I said that it can't happen. What I have said is that it's unlikely to happen. I still stand by that. I still stand by the fact that breaking 46k and closing above it on the weekly chart is unlikely. Right? Does it mean it can't happen? No. That's why you should be aware of a scenario, and this is why I've been making people aware for months now, aware of scenario. If it does play out, go ahead, buy some, right? But as of right now, we're not in that region. We're still in the rejection zone. We're still bearish. But with that said, we're still bearish, right? Looking at something like the weekly chart now, I hope my face cam doesn't get in the way here, but if we're looking at something like the weekly chart, what we can see is that a bullish MACD cross is incoming. We have 24 hours until the weekly candle close, and we can see that if that does close, that bullish MACD cross is going to be very evident, but I don't think it will cross just quite yet. I think it will flatten. Now, if we're looking at something like 2018, which we know, and we talk about every video, is copying the exact same price action as right now, right? 2018 is kind of a carbon clone of the current bear cycle. If we take a fractal, all we need to do, let's just do it quickly. All we need to do is take a fractal from 2018 through this period here and apply that to the current price action. And we're going to go over here and apply it to the current price action. Give me one second. There you go, and we're looking pretty much identical. You can see that purple fractal there. So this is a carbon copy of 2018 bear market. And what we did in 2018 bear market, similar to what we're doing now, is we came in for a bullish MACD cross. As you can see, we didn't quite cross. We flatlined. Bitcoin went sideways for a while, and then we dumped. Right, so that would suggest that in this bull cycle here, we're going to be coming in for a bullish MACD cross. We're going to close this week quite well, and then we're going to flatline, and then we're kind of just going to dump. Right, so again, still there is nothing that has happened in this bear cycle that hasn't happened in the 2018 bear cycle. There's no resistance that has been broken in this bear cycle that wasn't broken in the 2018 bear cycle. Nothing so far is suggesting that a bull market has begun. Nothing. And we look at something like bond yields, right, which is basically directly correlated to what the interest rates are going to be. And these are absolutely pumping, right? If bond yields go up, it's a prediction from the market that essentially interest rates are going to be pumping very hard. Jerome Powell's recently said a 50-point rate hike is not out of the question at all. We haven't seen a 50-point hike in, I think, 20 years. Okay, so if we see that, it's going to have some pretty negative effects in the markets. And interest rates are very low right now. But if we're going to be rising them by 50 points, that's a call. That's kind of like a necessary action to take to fight an admittedly horrible inflation rate that's going to put us into a recession if we're not already there. And we look at something like the DXY. It's very clearly broken out of a ascending wedge structure. It's currently facing resistance, but when this breaks out, it's bad for Bitcoin. It's breaking out right now. And so, when you just bring it all back to Bitcoin, it's very easy to kind of understand what's going on here. Very simply said, we are in a period of massive, massive resistance as predicted by the 4-year cycle theory. Breaking above 46k is possible, but breaking above 46k will break 14 years of 4-year cycle trends, right? The whole point of investing, I've said every video, the whole point of investing, the whole point of trading, the whole strategy behind trading is invest with the trend until it ends. The trend is Bitcoin goes down in this part of the market, okay? We're at the bull market support band. We're at critical resistance. We're at critical resistance in terms of the ascending triangle. We're at critical resistance in terms of the supposed ascending wedge formation. We're seeing descending volume in this upwards trend, which is a sign of exhaustion. The market is very much exhausted, headed towards resistance, and people are getting bullish preemptively, right? Do you want to get bullish preemptively and again crash down like we've done 4 times? We have gone up to this region on 1, 2, 3, 4. This is the 5th occasion we've gone up to this region. We saw a rejection. There's nothing that's happened this time so far that hasn't happened in the last 4 times. Why would we be getting bullish right now? That is the question I pose to you. That is the question I've been posing to people for essentially, I guess this entire downwards trend since January, and then I've originally been bearish since late November, right? If we start seeing a breakout, we start seeing closes above 46, we can talk about the bullish scenario. At this point, it's still very much bearish. With that said, there's no denying that we're making bullish steps in the right direction, such as the close above resistance on the total cryptocurrency market cap. There's no denying that, right? So again, we need to monitor the situation, but as of right now, this is not the time to be buying. I guess that's what I wanted to say. Thanks for watching, guys. Hope you enjoyed the video. And we'll be keeping an eye, especially on the 4-hourly chart, which is an ascending channel or ascending wedge structure, depending on how you see it. I'd say it's an ascending channel. I'd say the angle isn't necessarily sharp enough to call it an ascending wedge. But this is an ascending channel formation, a pattern of exhaustion. And I think this will be rejecting, from either this dashed yellow line or 46k. Let's see what happens. I'm still bearish. I'm still not bullish on this market. I still don't see any reason to be bullish on this market. But I'm interested to see what's happened because this is showing us, early signs of recovery here. But nothing is confirmed as of yet, and nothing's making me change my bearish predictions at this point. Still bearish, and I'll catch you in the next video. Cheers.